Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. We're going to get into it today. We're going to look at the price of gold measured in dollars, and we're going to look at uranium and get a couple updates from uranium, what's happening there. So let's go ahead and get into it. If you have any specific stock tickers you would like for me to pull up, be sure to leave them in the chat below. But as of right now, let's go ahead and get to the intro, and we will be right back.
Think, act, and prosper. You are now tuned into the Money Level Show.
Alrighty, you all. So first, we're going to go ahead and start off with the price of gold. Price of gold. Gold hit a new all-time high measured in dollars. And this isn't the all-time high measured in and inflation adjusted. So we have to keep that in mind. And I'm actually going to show you a tweet from Rick Rule, who actually gave the number for what the price of gold should be, inflation adjusted, for it to hit an all-time high measured in inflation adjusted. So we're going to pull that up here in a second. I have to find it. It's Rick. It's been tweeting a lot. He's been going in on Twitter. So we'll get to that soon. So the price of gold hit over $2,600. This was something that I expected to come. I expected to happen. I actually had a live video about this the other day, and I gave some actual charts and some technicals on the charts of where we should see gold go. And so I'm going to go ahead and pull that back up because I think that this would be key for us to look at. All right. So I'm going to go ahead and share screen. Let's go ahead and head over to Trading View. Boom. All right, let's see where we at. All right, here we go. All right, so Trading View. Now we're looking at gold. So I put the Fibonacci extension on here and the Fibonacci retracement tool, and pretty much, I mean, we put it here when gold was at a low here. It had reached this 2452, came down, hit this low at around 2304, somewhere around there, 2302. And as we did the Fibonacci extension, as you can see, the high for gold is above 2700. That's where the high range where it's supposed to be. As you can see here, when I put this chart up, gold was chopping sideways. And at this time, gold was chopping sideways, which is a pretty much a bull flag here. And as you can see, gold broke above that. And so now we have gold at 2606. And so I'm still looking at a 2700 target for gold above 2700. Most of the analysts are saying about 2700. And so I wouldn't be surprised to see it go above there at some point. We do have some critical things coming up this week. We had the gold price actually rally on the ECB, the European Central Bank. They cut their rates, and that means that there's going to be easy money policy coming forth. I mean, the central banks can only stay tight for so long, especially when countries are so indebted. I mean, the United States is paying close to over $1 trillion in interest expense on their debt. And so, so when you're looking at these, with high rates and how it puts more pressure on governments as well. So ECB cut their rates, and the Fed is going to be cutting their rates next week. And I think that this is one of the drivers for gold, is that, hey, there's going to be more money printing. There's going to be more currency devaluation with the looser monetary policy. Eventually, the Fed is going to stop selling its debt on its balance sheet. And, So I think that's the reason why gold is breaking above here. And so as we can see, it hit over 2,600 an ounce. So that's one of the things that I've been looking at. So here I'm going to go ahead and share screen. This is a tweet from Rick Rule. He shares um, the actual price of gold where it should be adjusted for inflation. And so we're going to go ahead and look at that right now. All right, here it is right here. Gold is not at all-time highs. It's at nominal all-time highs. So if you're not aware of what nominal is, that means that the current price is not adjusted for inflation. If you adjust the dollar for purchasing power, it would appear that the price necessary for nominal dollars to be at a real all-time high would be something like 28.50. It's important to understand that. So as we can see, it should take, for gold to hit an inflation adjusted all-time high, it would have to hit 28.50. And so that's where we're at with this particular where we're at with gold right here. So that's it for gold, but we're going to go ahead and transition to uranium. All right, so there's been some big articles that's come out about uranium. We're going to read through a couple of them, and then I'm going to actually give you a uranium stock pick, a nuclear stock pick that I've started accumulating, and I'm planning on buying some more if the price falls. But it is a very volatile stock because it is a small market cap, but I love the business model of the company, and so we're going to look into that. All right, so here we go. I'm gonna go ahead and share screen here. So one recent article that came out from Zero Hedge was the article about the Russia and Putin potentially going to ask the government to restrict critical commodities exportation. So exporting critical commodities, Putin put out a message to his government in terms of like, hey, we should consider restricting some of these critical commodities. Now, uranium is one of the critical commodities that comes out of Russia because Russia refines a lot or enriches a lot of the uranium that comes through the market. And so I forgot the exact percentage, but it's a high percentage. I don't know if it's 40% or something of that nature, but it's a high percentage for the world in trade. So we're going to go ahead and dive into this. Uranium stocks jumped in the early U.S. cash session after Russian President Vladimir Putin instructed the government to review possible measures to restrict exports of strategic raw metals such as nickel, titanium, and uranium in retaliation for Western sanctions. Russia is the leader in reserves of a number of strategic raw materials, namely natural gas, that is nearly 22% of world's reserves, gold at nearly 23%, and diamonds at nearly 55%. Mikhail Vlad, I'm not even going to try to pronounce that, the prime minister, I have a request for you to look, please, at some types of goods that we supply in large quantities to the world market. Supplies of a number of goods are limited to us, but maybe we should also think about certain restrictions. Uranium, titanium, nickel. Just do not do anything to our detriment, Putin told several cabinet ministers on Wednesday, as the Russian news agency Interfax reported. Putin said, strategic reserves are being created in some countries and some other measures are being taken, adding, in general, if this will not harm us, then we could think. I am not saying that we need to do this tomorrow. Think about certain restrictions on deliveries to the foreign market, not only of the goods that I have named, but also some others. All right. So as we can see, Russia supplies the market with a lot of enriched uranium, and they are considering restricting how much they are going to export. And so as we're still in these geopolitical tense times, you can expect countries to want to bring on more commodities and more supply online, and trying to be more self-sufficient. As you can see, as the United States government has has been really passing a lot of policy around nuclear and trying to change some things around with that. But yeah, that's going to take a lot of time. That's going to take time. I mean, especially to build enrichment facilities and things like that, infrastructure and things. So that's going to take time. Licensing. I mean, you got a lot of different components here, right? And so Putin is saying that, hey, should we restrict? They're considering restricting some of this, exporting some of these commodities. Sorry, you all. I'm just having a trouble. I haven't been reading all day, so I'm just getting my brain going. The US, UK, and EU unleashed a barrage of financial, economic, military, and energy sanctions on Russia shortly after it invaded Ukraine. Washington and Brussels were attempting to cripple Russia's economy or its war effort, yet that turned out to be a failure since China stepped in as a major commodity buyer. Meanwhile, the Kremlin has transitioned its economy into a full-blown war economy. Putin has boosted the nation's military budget by 70% this year, a post-Soviet record of over 100 billion. Due to failed Western sanctions, the US and Europe must face the genuine risk of trade restrictions by Moscow, pushing prices of nickel, palladium, and uranium higher. This comes as Western central banks are fighting the inflation monster sparked by their own doing. In markets, uranium stocks such as Cameco, Uranium Energy Corp, Uranium, this is URA's the ETF, and then URNM, the Sprott ETF, jumped between 5 and 7%. So as you can see the chart there, in addition to fears of Russia reducing or entirely cutting uranium exports, Kazatomprom, the world's largest uranium producer, announced last month that it would cut its 2025 production. So this makes the supply a lot more tighter, which is that's where you get the supply squeeze. You get less supply. You still got a lot of demand. I mean, the United States uses 20% of its electricity that it generates is from nuclear. And so Kazatomprom cut their 2025 production forecast due to mounting supply chain woes. We suspect uranium prices are set to jump once again. A tight uranium supply theme rolling into 2025 could pressure the prices even higher. So there you have it. I mean, this is going to be major for uranium. I think that the prices of uranium are going to go higher, and we're going to actually look at some stocks here in a minute. But I also want to show another article that came out. This was on Barron's, and uranium is starting to get a lot of publicity on the big stage. So on Barron's, I mean, there's a huge, news platform, financial news platform, and they put out an article called "Get Ready for the New Nuclear Age. It could help solve America's electricity problems." Artificial intelligence and electric vehicles are devouring enormous amounts of electricity. Constellation Energy and Vistra could benefit. So obviously they're giving specific company picks here, and you have to do your own due diligence, right? I don't know if you want to follow a Barron's or a Wall Street Journal or whatever stock picks they give out there, but these are a couple of companies that they mentioned throughout the article. All right, so just south of Harrisburg, Pennsylvania, on a narrow island in the, however you say that, river, something extraordinary is taking place. The 3 Mile Island nuclear plant, scene of a historic radioactive meltdown in 1979, is quietly getting prepped for a second chance. Within 3 to 4 years, the plant's one undamaged reactor may start up again, heralding a new era of American energy. So they're looking at restarting one of the reactors at 3 Mile Island. I mean, this is a big shift from the sentiment of, nuclear being hated, uranium being hated and such. And this is a big shift from that. It would be incredibly symbolic, says Joe Dominguez, CEO of Baltimore-based Constellation Energy, which owns the 3 Mile Island reactor. The 1979 accident taught the industry hard lessons about how to make nuclear power safer. Now, Dominguez says it can also be the birthplace for this renewed interest in nuclear power. The stars are aligning for nuclear power revival in the U.S. The government is funneling billions of dollars into the industry. Tech luminaries like Bill Gates and OpenAI, that's ChatGPT, Sam Altman, are backing new companies, and public support for nuclear power is firmly on the rise. One sign of the industry's rebound is Constellation's stock price. The nation's largest owner of nuclear power plants was begging state regulators for bailouts just a few years ago. Now it's thriving. The stock is up 70% in the past year. There's reason to believe that shares of Constellation and peers like Texas-based power producer Vistra will keep rising as government support increases and utilities boost payments to nuclear plant owners. Other publicly traded nuclear players, such as Canadian mining and nuclear tech company Cameco, could also benefit as demand for uranium rises. So now we're getting to the uranium piece, right? I mean, because uranium feeds the nuclear reactors. So even though companies like Constellation and Vistra needs produces energy, electricity through their nuclear power plants. They need the uranium to feed the power plants, and that's where companies such as Cameco comes in. All right, so the rebound has come just as the nuclear age looked to be in its twilight. America's 94 nuclear reactors generate 18.6% of U.S. electricity, enough to power 72 million homes. They're the largest single source of carbon-free energy in the country. But nuclear's share of total electricity generation has been ebbing for years. After peaking above 20% in the 1990s, a dozen of U.S. reactors shut down from 2012 to 2021. All right. The biggest reason for nuclear power's resurgence is that U.S. electricity demand is growing after more than a decade of flat power consumption. In some areas, demand is exploding. Electric vehicle data centers, powering artificial intelligence, and new factories fueling a made in USA industrial boom all need enormous amounts of electricity. Utilities are scrambling to secure reliable power, and they are willing to pay up for it. The electric grid operator covering the Mid-Atlantic and Midwest agreed in July to boost capacity payments to power plant owners ninefold, a multi-billion-dollar windfall. Okay, so we can see it's a lot of energy around nuclear right now, and this is another bullish case for it to go a lot higher in the next 3 to 5 years. And so I'm definitely holding on with that view. Then obviously, if Russia decides to restrict exports of uranium and such, or enriched uranium, that's going to squeeze the market even more. So a nuclear imperative. The world will need to more than double its nuclear energy capacity to achieve net zero carbon emissions by 2050. As we know, like many of these countries are ambitious, and they want to reach net zero carbon emissions, right? Obviously, I don't think that we're going to get to zero, but as you can see, this is how much it's going to take. I mean, you got population still growing. It's going to take a lot more power, and they're going to have to get nuclear on board. In past centuries, that new power might have come from coal, but America's climate goals favor sources that don't emit carbon dioxide, and that points to nuclear, solar, and wind. Among those, nuclear stands out as a clean source that can run whether the sun shines or the wind blows. Oh, my brain is just not firing with the reading today. But as we know, nuclear is a baseload energy that does not depend on the wind blowing or the sun shining. So we need hundreds of Hoover dams worth of firm power if we're going to make this energy transition. And we're not in dam building mode anymore, says Katie Huff, a University of Illinois professor who was the highest ranking nuclear power official at the Department of Energy until she left in May. Huff's time in government was remarkably fruitful for nuclear energy policy, with plant closures stemmed and older facilities upgraded to improve in performance. There's still there's a large caveat of the story of a nuclear renaissance, even as the Biden administration and state governments have saved plants from closing and urged owners of defunct sites to start them up again. The country's larger targets look daunting. Tripling nuclear capacity would necessitate building about 200 large-scale reactors, yet not a single one is under construction today. Even if a project were to be announced before the end of the year, it would probably take a decade to plan and build. So as we can see, to triple nuclear capacity, that means we would have to build about 200 large scale reactors. This is large scale reactors. So this isn't like the small modular reactors or the micro reactors. These are the large ones, right? And it's saying that before we even get there, it would take like a decade to plan and build them. I mean, China's already underway with their building, and they actually reference this in the article here. The most important players in the industry, utilities from with the heft and expertise to build reactors, aren't ready to commit to big projects despite increasingly generous federal and state subsidies. The DOE acknowledged in one report that the industry is stuck in a stalemate that may not break without more taxpayer backing or innovative funding models. The U.S., which has more reactors than any other nation, is on the verge of falling behind. Around the world, 64 reactors are being constructed. China is building about 30 of them and has lately been approving new reactors at a rate of 10 or more a year. France, Russia, and South Korea have ambitious government-supported plans of their own. So as you can see, the U.S. is behind in building these reactors, right? So, I mean, this is just a lot of bullish news for uranium, and I just think that the stocks are going to go a lot higher. So we're going to go ahead and transition. I'm not going to read the rest of this article. I mean, it's a good article, but my reading is just off today. So I'm sounding like Biden reading off the teleprompter tonight, y'all. So we're going to go ahead and transition. I want to share a company with you all that I was notified about months ago from a friend of mine. And this company is called Nano Nuclear. So I'm going to go ahead and share screen on Trading View and show you this company. All right, so here we go. Boom, boom, boom. All right. So this company here, Nano Nuclear, this company, I'm hoping to get the CEO on the channel soon. I was corresponding with his team, and hopefully we'll have him on soon. And this is a pretty new company, but they are doing something very innovative, and they are looking at building small micro reactors or micro nuclear reactors that could power things such as homes and such. And they are looking at bringing these to the market sometime in this decade. And so so this is a company that I was told about when it was I think it was close to, I think they were doing private placements around $1 or something of that nature. I did not even think about it. Like sometimes I just get stock picks from everywhere and I just can't invest in every single company. So I just ignored it. And sure enough, the company goes from, you know, under $1 or wherever they had their private placements at. They went public, and then they shot up to about about $40, somewhere around there, $37. And they've come down since then, but they are starting to shoot up again. So this company is doing something that many other companies aren't doing. And the CEO, his name is James. I found him on, so first a friend of mine notified me of the company. Then I was at work one day and my coworker notified me of the company, because we started talking about He was talking about power grids and such. And sometimes I just get on these random conversations with with people, and we started talking about power grids, and then I started talking about uranium and nuclear power, and he started sharing his thoughts on it. And then he pretty much said, "Hey, we're gonna, pretty much he's investing in nano nuclear." And at the time, this was um, this was sometime in late July. Nano nuclear was at about $15, and then I saw it fall, and rose back up, and then it fell again. So I didn't really get back in until around this point here, and when the stock market was selling off significantly, and uranium was selling off, and everything. So I got back in. I got in here, but I wish I would have taken a bigger position, because then it just started taking off. So this is a small market cap. I mean, it's about 250 million. So this stock moves really, really fast. And so, I mean, we're looking at the daily chart here. I mean, as you can see, just over what, 1, 2, 3, 4, 5, 6, 7 days, it went from $7 to $37 in 7 days. So the stock does move really fast, and so this is a company that I'm looking at right now, that I've been buying and investing in, and I'm looking forward to speaking with the CEO. Now, the CEO has been on channels such as Jordan Peterson. He did an interview with Jordan Peterson about 2, 3 months ago, and they were talking about the innovation of this company. So I think that may have been a driver for a lot of this price movement here. And there's been a lot of bullish news just about what they're doing. They were just added to the Russell 3000 as well, and things of that nature. So the company does not have a product yet. They have some designs, and they have to get some things approved through legislation, and many other things of that nature, right? But this is a innovative company that I think could potentially perform well, as we see I mean, it's already performed well since an IPO, but as we see that the legislation around nuclear is changing, we see the bull case for uranium. This company could benefit significantly. So this is a stock pick that I'm investing in. I'm still doing some due diligence around it. I'm sitting in profits now, because I was buying around $7. I wish I would have bought more, but I took a healthy size in terms of not risking too much, because I don't know a whole lot about the company. I do know quite a bit from what the CEO has shared in the interviews I've watched with them, and I mean, even Jordan Peterson got really in depth about the business model and everything, and so that was really helpful. And so this is just something that I'm looking at. So if you want to look at this as well, you definitely can. But this is a company that I wanted to share with you all, that has been moving significantly lately. So if anyone wants to look at any stocks, feel free to put some tickers in the chat, and we can look at them. All right. I was thinking maybe we can start with some other uranium companies. Let's start with some big caps. Cameco. I've been buying Cameco. Let me go ahead and delete this. I was sharing that with sharing this with Rick Rule in the last interview I had with him. So I've been buying Cameco. I mean, it hit $35, bounced up to about 40, 44, came back down. I bought some more, bounced up. Now it's hanging out around $40. I'm sitting in this for the long term, sitting in this for the next, 3 to 5 years. I wanted to get back into Cameco, as I've shared. Like, I was originally buying Cameco back in 2021. It was like late 2020, 2021. Cameco was at about 12 to 14 bucks. I sold it around 20 something dollars. And so to get back in at the, 30, 35 to $37 range, I felt like it was a good range, especially since it's come off the highs of $56. And so that's one of the big caps that I've been purchasing. Obviously, you have the individual smaller caps like Denison Mines. Denison has been struggling. Obviously, it hit about $2.50, $2.48. Came all the way down to about $1.40, $1.39, and it's been at $1.57. So this is definitely one that people could load the boat on as well. I've been buying Denison as well, and yeah, so there's quite a few that I've been buying. I've been buying some oil. I've been buying some gold royalty stocks, royalty and streaming stocks and such. And so I've been just in buying mode right now. So we can go ahead and look at some tickers. Let's see. We got Neophyte, Oklo or Oklo, whichever one you say that. I was actually looking at this one because this is what Sam Altman and the CEO of ChatGPT is investing in. And this is a nuclear company. They they produce nuclear energy and such. And so, as you can see, at one point back in when was this? Let me see if I can hide that. All right, here we go. Yeah, back in May of 2020, May of this year. I mean, it hit over $20, close to $20, right? And then it just fell significantly. So it's been trading down significantly since then. But I mean, as you can see, I don't know much about the company, but I do know that there's some big money that is playing with the company in terms of Chat GPT. I mean, them being bought out by Microsoft. Obviously you got Microsoft. They've been purchasing data centers that's been where the electricity is generated from nuclear energy and such. And so you definitely got some big players involved in here. And so it could be a play for the long term, especially if you are, or it could be a speculation play. I don't know much about the company, but as you can see, I mean, if you're looking for a trade, I mean, we could definitely look at some levels here. As we can see, this is some a support level here. Let me go ahead and draw out the support lines really quick. Let's do it. All right, so now you got me working on my technical skills that I've been practicing a little bit. All right, here we go. No, hang on. That is not right. That is not right. Here we go. All right, let's draw a range. All right, here we go. Boom, 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 boom. All right, so we got a range here. I don't know why my mouse is just tripping out, y'all. It's not acting right. Okay, so we look at this range here. I mean, as you can see, obviously there's not a lot of history in the stock. I mean, if you go far back, it was just flat for a long time. And as you can see, when it had this significant fall here from fall from grace from $15 to what it bounced down to $7 in one day, popped up, came down, hit support here. This is where it had support, and it bounced off of this level. And as you can see, it still traded up, came up, and then it bounced off this level again, right? This range, bounced up, came down again, bounced off that level, chopped around this level. It didn't break down until in August, it broke through this level, it broke through the support. So if you're looking for a bounce upward, I mean, this level is going to probably be some resistance here from, let's see, about 689 to about 711. So that range there, 689 to about $7.11, is going to be some resistance. It could just blow through it depending on the market cap of the stock and such. But that's the next resistance level. If you're looking at support, I mean, support would be down here. Down here, this is the local bottom at around 536 and such. And so, if you want to look at the next levels for this, I mean, we can see We can see some levels here around $8. Got some more levels here around $9 and such. And so if you're looking for a short-term trade, I mean, I think that it could potentially, this is where it's going to probably go through, have some resistance. But if it breaks through, obviously it could easily break through to $9. And this stock looks like it can move pretty quick. So Oklo, that is one of the companies that's been on my radar as well. I just have not bought into them yet. Any other stocks you want to look at? Deep Yellow. All right, what's up, the Cap? Good to see you. Good to see you. Yes, it's been a minute. I've been going live a little more lately, but yeah, trying to stay consistent. You know, keep the content going, keep the channel growing. Almost at 5,000 subscribers. So shout out, appreciate y'all supporting me for a long time. So definitely appreciate y'all. All right, so Deep Yellow. Let's look at Deep Yellow. All right, let's see. Here we go. Deep Yellow. All right. Looking at Deep Yellow. Okay, so Deep Yellow it's up quite a bit. I mean, I was in a Deep Yellow back in, well, there was about 40 something cents, somewhere around there. Let me go to the weekly chart. This daily is kind of, oh, that looks ugly. Let's see what the monthly look like. This chart is looking ugly, y'all. I gotta reset this dang chart. I forgot the shortcut for it, so we're gonna go back to the daily. Because I don't feel like looking up a tutorial while we on live. So here we go. So obviously we see Deep Yellow hit $1.20 earlier this year, and that was the high for this company. And hit $1.20. I mean, came all the way down to, I mean, August 5th on the Japanese yen carry trade, hit 56 cents. Now it's back up to 76 cents. I mean, the next level, I mean, this is the gap down. As you can see, it's straight gap down over that weekend. I would say, I mean, it's already broken through this level here. I mean, yeah, it's pretty much in this range here with these two. So if I were to draw, let's go and draw a range here. This thing is really tripping, man. Yeah, I don't know why my mouse is just tripping out. So obviously this is a range here, as you can see. I mean, it chopped above it and below it and such, but you know, it all hit in this range. I could draw the range bigger over here, but blew through it, came down, hit support, bounced off of it, came down, didn't hit support, bounced up, bounced higher, came down, hit support, bounced up. And then if I were to drag this over, you know, as you can see, it's already closed above the support. It broke through, came back down, closed above it. So, I mean, right now it's in this support range. I would say next levels would probably be somewhere. Let's look at the charts. Look at the charts. I mean, somewhere in this range, I would say 87 cents. 80, yeah, close to 87 cents. 87 to 88 cents. That's where I would look at for this next range here, around here, that it could pop up. And that's if you're looking for like a short-term trade. Obviously, you know, if it were to start getting up to this level again to 120, that's going to be your swing top, which is going to be more resistance, but it could blow through it. So yeah, but deep yellow currently at 76 cents. I mean, if you're looking for the long term and you're not looking to trade, I mean, it's obviously a good company. Many people speak highly of it, and it is a play on a uranium trade. But if you are looking for a short term trade, I mean, you probably get a bounce up to about anywhere from 84 to 87 cents in that range. So that's what I'll be looking out for that one. Let's see. Neophyte said hedge funds got in at $11 for Oklo. Not bad to get in right now, I guess. Yeah, I mean, if the big money got in that, got in there, I mean, they're probably holding for the longer term, so they definitely down in their investment. And so, yeah, see, Deep Yellow has been running since 2020, 261% in the past 5 years. You have missed the real money. Yeah, so what I would say, I wouldn't say you've missed the real money. I would say you've missed the easy money. Like Rick Rule says, when you get in at the bottoms, and uranium. I mean, all uranium stocks. I mean, like the easy money has been made. From me getting into Cameco at $12, the easy money has been made. Same thing if you would have gotten in Deep Yellow at the 2020 lows. Any energy stocks, I mean, the oil companies, all of that, like the easy money's been made. But obviously the narrative is still intact. The case for higher uranium prices is still intact. The story just keeps getting more and more bullish. I think that we're going to continue to see some higher prices. So if you're holding for the long term, I think that it's still going to be beneficial, and you can still make a decent amount of profit. Just not as much if you got in at the lows, the really lows. So I see the cap said, never liked trading all long term. I respect it. Me, I'm long term too. But the one thing I'm trying to learn, well, one thing I'm actively learning, and I wouldn't say trying to learn it, the thing that I'm actively learning is when to take profits. Sometimes, people get into trades for long term or investments for long term, and they don't take profits. And so you have to be watching. I mean, obviously you're watching the markets, but you have to be watching and knowing when to take the profits. What levels are you going to take profits? That's the question, the hard question to answer. But yeah, definitely, I'm long term on quite a few companies, but there are some companies that you can make a quick trade and make some profit. Like obviously, if you bought Deep Yellow at 54 cents, even if you have other uranium companies, and you're like, hey, this is getting oversold. Let me go ahead and buy into this and then make a quick short-term trade. I mean, you could look at, let's go ahead and look at the RSI. So there's different indicators we could look at. Let's go ahead and look at the RSI. Relative Strength Index. Okay, so as you can see here, the relative strength of the buying was a lot higher. Obviously, the RSI usually above 70 means that it's an overbought territory. But as you can see here with this yellow line and the purple line, you can see that it was significantly higher. The stock price was higher, and it started a crater, right? Started a crater. And so here, it's getting into oversold territory. As you can see, the purple line crossed below the 30. And as you can see, the stock price hit 56 cents here. So it got oversold, and then you got this bounce back. People bought back into it. Stock price hits 80 close to 80 cents. So I mean, if you were wanting to trade this, you could make a quick profit off these opportunities when these stocks fall low, um, significantly low. I mean, and I don't just I'm not really commodities trader because I am long term on commodities, but there are many types of other investments that you can get into that you can play this. Let's see what y'all talking about. Came into the sector late. Happens. Told myself next resource to act similar to uranium. I won't miss. Yes, and you're not late. You're late from the easy money, but you're not late. Many people still haven't gotten into this. I mean, we can see that with gold, right? Physical gold is up, but the miners are just now moving. Um, and I'm still waiting on confirmation on the miners. I'm in the royalty and streaming, which they've performed well in the last week or so, but yeah, I'm still waiting on some more confirmation before I start really buying a lot of these companies. Neophyte said, "Man, imagine if you bought Apple at the first million, you sold it all because you thought it couldn't go any higher." Yeah, so yeah, Lobo, is always doing some good work, very objective. I love when Lobo comes on the show and everything. Um, yep. How do you tell when to take profits? Because most of these stocks take a few years to run. How do you gauge the top? So how you gauge the top? I mean, you can look at technicals, right? Um, that's a way. So obviously, some people do it based off valuation. I mean, these are the assets. These are the net present value of the assets, and you get a number. You get a number of like, okay, this is the value of the company. So my guy Benjamin from the ROI channel, that's what he does. Like he looks heavily into the assets of a company, and he comes up with a price of where that company should be worth. And if it gets to that price or if it overshoots that price, then he's in the profits and he knows that he should probably start trimming some of the profits. So that is one way. Some people do it based off technical analysis. So obviously, you have different technical levels here. As you can see, like even here, right? This is a technical level. If I draw a range here, um, as you can see, let me just draw the range since hopefully the mouse works well here. It's just freaking tripping out. I don't know why it's doing that. So yeah, so like I mean, you can do technicals as well. So let's say you got in here, you're like, okay, well, this has been resistance and support for when the company gets up here, and you may want to take profits between 104 and 106. As you can see, it goes up, hits 104 through 106, comes up, breaks through it, comes down, bounces off of it, comes down, bounces off of it, breaks through it, hits this support level again, rises up, breaks through this resistance here, comes down. It kind of chops around, it bounces off of it a few times, comes down, comes up, gets rejected at this resistance level, comes down, bounces off this support. So those are some ways that you can also trade, or know when to take profits, right? And this is like a lot of trading too. Like it has a lot to do with what the big money is doing, because the big money is a lot of these levels. Many people are looking at these same levels, and let's say the big money market movers, they'll say, okay, this is oversold around this level. They'll pump money in, people get in, buy it up, comes back down, and they sell at the top. They sell around these areas, right? Big money may sell around here, and then the stock comes down. They may buy again, comes up, So and then you could draw multiple levels within here, but I just wanted to show this as an example. So that's another way that you can know when to take profits too. Obviously, you do get into uncharted territories, like when we look at gold, right? uncharted territories. Gold has never been this high before, right? So now what I had to do is put the Fibonacci extension on to determine where could gold go. And as we can see, it's going to be at about 2732 to hit the one. This is like the most optimistic level. And obviously, Rick Rule said it needs to be about 2850 to be at an all-time high adjusted for inflation. So those are some ways that you can kind of measure when to take profits and such. Hopefully that makes sense. I've also been trading on other types of companies. This was a company I was looking at, and I didn't play it. I wish I would have played it. Children's Place. This is a this is a company. They've sold children's clothes and all of that. I need to figure out how to reset this chart. There's a shortcut for it. So I was watching this company. It's on my radar, and I was watching it. Okay, it fell down to 6%. $6 bounce, and it came all the way down to about $4. It came down to $4, and then it's just they put out some good data. I was gonna buy a call option on it, and it just ripped straight higher, ripped up, up 120 something percent, back up to $15 in the last 3 days. Yeah, so sometimes I'm trading like companies outside of commodities as well, and that's just because like I'm learning more about the trading and how to look at technical charts and things of that nature. So yeah, but there's multiple ways where you can learn where to take profits. Long story short. Yes, that is wild. Yes, this is wild. I was literally thinking, I was like, hey, let me buy a call option on Children's Place. Just not because like I had a conviction on it or anything like that. I just felt like it was just significantly lower. Now, if we look at, I didn't look at the RSI or anything like that. Let's see. Let's pull the RSI up. See if it was oversold. Right. So RSI got down below 30 over here. Right. You can see RSI was up here at 70, overbought at 15. Starts selling off. RSI goes down to about 29. And at this price, it was at $6. It bounces up to about $9, comes back down and just chops, but it doesn't go back to that lower low. And then it just starts getting cratered, right? RSI comes down to 26, about 26, and then it just takes off. Right now, it's way oversold. Way overbought. It's at 84 right now. They've been having some bad numbers for a long time. They put out some positive numbers, so people are piling back into it. But this may be like shorting territory where you may say like, hey, let me go ahead and buy a put option because I think that it's going to come down at some point. But you could also get wrecked doing that too. But as you can see, the RSI is just like a straight line up. It's overbought, and who knows? It's ran for 3 days straight. So I wouldn't be surprised to see it come back down and test some of these other levels. But that's a way that you could trade. That's a way that you could trade. All right, you all. Well, I'm gonna go ahead and get going, get some rest. You all take care. Let's see. Neophyte said, D, is there a certain stock that you feel comfortable buying all the time, regardless of news, rumors, etc.? No, that's not. Every stock in my portfolio will get sold at a certain price. The only thing that I feel comfortable buying all the time is gold. I've been buying Bitcoin too, but mostly gold for the most part. So yeah, there's not really a specific stock. I think that um, a few things. Obviously, you can compound over time, make your money compound for you. But I also think that you need quite a significant amount of money to really compound off dividends. And so when you look at a Warren Buffett that's able to throw millions of dollars into a company that he can get, 3% dividend, 4% dividend on, and he's getting return billions, hundreds of millions back off just the dividends alone, right? Versus someone who may be throwing like, $300, $400 into a stock, and it's like, okay, to compound that, it's going to take a long time. So for me, it's like, hey, I'm taking profits for sure. Um, yeah, I'm not really holding any company for forever, um, all the time. Yeah. So I mean, I have been buying a few different companies. These are some companies that I've been buying. I bought Dollar Tree recently, and this is because Dollar Tree literally fell off a cliff. I mean, Dollar Tree was just at, let's see, where's Dollar Tree at? Dollar Tree was at, I'm trying to bring the chart up. Let's see, where did Dollar Tree go? All right, so Dollar Tree, April of 2022 was at $176. Let's look at earlier this year. Dollar Tree and back in March was at $150. This joint has been cratering ever since. So let's see, you had a significant a gap down here. Then bad news came out, and then it just straight gap down here to it's at 60 something dollars right now. I'm trying to get to the day. Okay, here we go. Yeah, there we go. Yeah, Dollar Tree hit down to $60. Just gap down. And as you can see on the RSI, way oversold. I mean, it got down to below 20. Yeah, 12. And I was tempted to buy a call option on this. I said, okay, Dollar Tree is significantly oversold. I was tempted to buy a call option, expecting to bounce back upwards. It did bounce back up to about $70 from 60. And obviously, you're not going to be able to time the bottom, but it still has a lot of room to fill. So I mean, to even get to the next level, I mean, say like 85. So I mean, you can make a significant amount of money off the call options on that. But yeah, Dollar Tree sold off. I think that even if we're going into recession, these are the type of companies that people are shopping at. They're shopping at Walmart. They're shopping at Dollar General. They're shopping at these different places, right? So the cheaper places. Same thing for Dollar General. Dollar General took a huge hit too. I mean, this was trading at Dollar General was at, let's see, where was they at? Oh, yeah. November 2022, $261. Yeah, $261. Gap down, boom, 153. And it gapped down again, $100, bounced back, 168. Now it gapped down again to $80. So as you can see here, RSI oversold. It was oversold back here too, right? Oversold. And what happened? What happened when it was oversold? Let's see. We're gonna look at every time it was oversold. All right, here you had from June of 2023, Dollar Tree was oversold. It fell from what? $222 down to $153. So it fell about $70. Oversold, bounced back, from about 155, somewhere around there, to about 172, as you can see. Then it goes down again significantly, oversold again, as you can see. The same zone here is matching up here. Goes from 157, it hit 173, came all the way back down to $100, oversold, bounced up. As you can see, this went from $100 to $168. Then it's come down. Now we're at this oversold position again of dropped down to $80. Right. So now, even though like this isn't a valuation that I'm doing on Dollar Tree, these are just technicals. So these are just psychological technicals that I'm doing on Dollar Tree. And I've been buying at $80, and I'm expecting Dollar Tree to make a bounce back at some point. I mean, this has happened with multiple different companies too. I mean, we can look at, I've shown Nike on the show multiple times, right? Let's see. You said, wait, so Dollar Tree has been struggling the past 5 years. What made it drop that nasty? This happened to Leg as well. IP just took a nasty fall too. Yep. Disney and Nike did the same thing. Yep, exactly. And a lot of these are like forward guidance for, company performance moving forward. But Dollar Tree and Dollar General are like recessionary companies. Same thing. I mean, you could look at we could look at Walmart. Walmart's still doing good. Walmart and Target. I mean, Target was killed nasty earlier. I mean, last year. And yeah. But so yeah, Nike here. I was buying Nike. Nike hit $70. It bounced up to 85. Then it came back down. Now it's at 71, 79. But Nike's still, still significantly under its all-time highs. It could go lower, but as you can see here again, RSI, right? Below 30, oversold. Then you get this bounce up to 70, right? And then you could have bought Nike at 71, sold it at 85, came back down. All right, so looking at the charts can definitely help you look at the psychology of the market. And obviously, some things you can't really prepare for. Let's look at Starbucks. This was something that no one was expecting. I mean, probably insiders, but yeah, I mean, Starbucks got killed from over $100, came down to 72. It got news that they hired I mean, as you see, oversold, bounces up to 80, falls back down, oversold again, bounces up again to 81. Then, as you can see, now it's overbought here. But the news was that Starbucks had hired Chipotle CEO. Nobody was looking for that. Nobody was expecting that. The joint just freaking went from 80, $70 to $100. So those are some ways that you can trade and make money in the meantime, especially while you're waiting on commodities to really start to outperform. And so some people to each his own though, right? For me, like I've been telling people like, hey, I need to make some money in the meantime. Like while we're waiting on this commodities bull market and everything. I mean, I've been buying oil while they've been getting killed and stuff, but yeah, I need to make some money in the meantime. So I have a certain portion of my portfolio to trade. So yeah. All right, we'll look at Oxy. Then my computer's about to go dead. All right, let's go. Occidental. And Occidental been getting killed. Yep, Occidental right now oversold, down to 20. Very oversold. I mean, obviously Warren Buffett is one of Warren Buffett's favorite companies. It hasn't been this low. I mean, it hit this low kind of earlier. I mean, it was at $55. Um, Obviously back in 2022. I mean, it just started taking off, but I mean, all the oil stocks were going up. Then right now it's oversold. You could get a bounce. There's talk that oil may continue to fall later this year, especially if we get more news of recession and such, depending on how election plays out. So oil could definitely fall some more. But I mean, you're obviously getting in at a cheaper price than people that bought in up here, right? Um, I've personally been accumulating more Vital Energy. Well, not more Vital Energy. I was in Vital Energy from $40 to sold it at 50 something. And then I got out. I haven't been in Vital Energy in a while, but a solid company. Josh Young talks about them quite a bit. But yeah, so I mean, Vital Energy is traded as much as $120 in recent years. I mean, it was significantly higher than that back in the 2000 early 2010s oil bull market. But as you see, it's oversold. I mean, it's at $26. So I was originally buying Vital Energy around this area, 44 as such, sold out of it. My guy, Ben, he said he got out of it too at the right time. And before you know it, started cratering, $26. So best believe I started buying because why? Because Vital Energy, solid company, is at $26 now. The pandemic lows were $7. Now, will we go back that low? Probably not. I mean, it would take something catastrophic to bring us there. But I mean, this was way oversold back in pandemic era. But yeah, it's super low enough, and I'm willing to keep averaging down because if you look at Vital Energy over the course of its history, I got to figure out how to reset these charts. I'm not even gonna look at that. It was in the hundreds of dollars, pretty much. So yeah, those are some things that you can consider as you navigate your investment journey. So yep, looks like a great time to buy for Occidental. Warren Buffett's average is $50. I'll be waiting. EDCA almost a full year, dollar cost average. And then would it be a good idea to take 2021 highs of stock share prices engaged when you should take profit? Yeah, I mean, it's kind of like many people buy in tranches. So if you're gonna, let's say you put $1,000 into a company or whatever, and you have a total of like $3,000 that you want to invest in a company. Many people would buy, let's see, Vital Energy. Right now, you may put $1,000. Let's say it goes lower, you put another $1,000, and you average down. Right now, when you start to get profit, let's say Vital Energy pops back up to $30 or something. You're like, okay, yeah, I'm above my average cost per share, especially from when I started this tranche or when I invested in some of the other tranches that I've invested in the company. You can start taking profits that way too. But I mean, obviously, it depends on your time horizon. How long you think it's going to go up, which companies you want to hold for longer term. I mean, with Oxy, I mean, you could follow Warren Buffett's filings and such. I mean, he's obviously investing in it for a longer term period, but that thesis isn't fully playing out yet. But at the same time, Warren Buffett, he files every quarter, so he could be selling the stock, and you won't hear about it for another 3 months or something. So you just got to kind of be careful, especially when you're following some of the big money and what they're doing. So yeah, 2021 highs were crazy, and I think that oil is getting beaten down, and this is when you should be buying. You're buying when it's blood in the streets. Blood in the streets. That's when you're supposed to be buying. You have to psychologically stomach it and buy then. Um, Struggle to find a percentage. I feel it's good to take profit. I'm starting to be okay after 20%. Yeah, yeah. I mean, profit is profit at the end of the day, and yeah, I wouldn't get caught up in the bias of looking at 2021 highs and things of that nature, because many people lose money thinking that it's going to go back to those levels, and that's not the case all the time. And so you don't want to have the recency bias of how the company performed recently. You want to definitely take profits as they come. And also, I mean, you can also let it run and use a stop loss. So let's say you use your stop loss at 20%. Okay, I'm up 20% on my investment. Stock keeps running. Okay, I'm putting a stop loss at 20% profit. And then you can adjust that stop loss upward too. Okay, well, now since the company is at 40%, I'm going to put my stop loss at 30% now. So those are some ways that you can also protect yourself too, is using your stop loss, your trailing stop loss. So you take profits at 20%, or if it's up 20%, you can put it at 10%. Um, and yeah, and things like that. You said couldn't imagine taking a profit on a company stock like Nvidia. Yeah, I mean, some of these companies are just going to keep running and stuff, and it's just, yeah, you're not going to win every trade, or you're going to miss out on some profits. But um, I mean, it just kind of depends on your view. Some people think that tech is here to stay. I'm more focused on like um, these AI companies and everything, these data center companies needing clean energy to be in favor with governmental and governmental entities and such. And so I'm betting on the commodity in the ground, the nuclear. So uranium. All right, y'all. I got to get going. I got to get some rest. Y'all take care. Peace out. We'll be in touch. Be on the lookout for new videos. I've uploaded a lot of videos this past month. Be sure to go check them out and everything. And we'll be in touch. All right. Peace.